Welcome to the Eastern Shore Market Watch, brought to you by Real Estate Business Intelligence, an MRIS company. Let's examine the most recent numbers from the Eastern Shore housing market, which includes these areas. Compared to the last 3 recessions, economic growth following the most recent recession is modest. For example, in the 3 years following the 1991 recession, GDP grew an average of 3.2% a year. Over the past 3 years, the annual rate of GDP growth has been only 2.2%. The economy is still adding jobs, but August was lower than most analysts had expected with only 96,000 new jobs, and the July jobs number was revised downward. The unemployment rate dropped to 8.1%, but that small decline was likely due to discouraged workers leaving the labor force rather than unemployed workers finding new jobs. Over the last 12 months, the U.S. economy has added 1.8 million new jobs, fueled by growth in the private sector. These private sector gains were partially offset by job losses in all levels of the government sector. Slow economic growth is likely the story for the rest of the year. At its September 13 meeting, the Federal Reserve initiated a third round of mortgage-backed securities purchases, or quantitative easing, and extended its commitment to maintain low interest rates through mid-2015. While intended to spur private sector lending, job growth, and support housing's recovery, there is no consensus these actions will have a significant impact, and Congress will have little appetite for legislative activity prior to the November elections. Eastern Shore posted strong job gains, adding more than 2,000 jobs over the past 12 months. However, the region's unemployment rate remains stuck at 8.1%. Buyer activity continues to grow compared to last year. There were 210 sales in August, up 5% from August 2011, and that's the 7th occurrence of year-over-year gains this year. There has also been an increase in new pending contracts, which have historically declined late in the summer. The 281 new contracts signed in August are 22.7% higher than last year and up 8.1% from July. This is the highest August level of new contracts in 6 years. While buyers continue to absorb the inventory of homes for sale, active listings are decreasing. This is creating a tight supply market. The 2,948 active listings at the end of August are 12.4% below August 2011 and the lowest August level seen in 7 years. New listings, on the other hand, increased in August, up 20% from a year ago, perhaps an early indication of a changing pattern. The tightening supply of homes for sale is having an impact on prices in the region. While the overall median sale price remained flat at $220,000, townhome and condo median prices increased 20.2% and 42.2% respectively. These types of properties tend to have lower price points, which could explain their increase in demand in these economically uncertain times. Homes are also selling faster. The median days on market has dropped 14 days since this time last year to just 92 days. Despite the late summer housing market activity, overall economic uncertainty and pending federal actions will likely temper the momentum as we head into the fall. Even with historically low interest rates, demand will likely ease up and price appreciation will moderate as some potential home buyers and sellers retreat from the market. That's the Eastern Shore Market Watch for this month. Check back next month for the latest.